Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns on Nifty, Bank Nifty as well as on the different asset classes. Now first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the rally is getting sharper and sharper day by day. The primary trend is positive, and sooner or later, or rather than later, Nifty might cross its all-time high, which is 18,604, once it closes above 18,000 mark. Last week, for the first 3 days, Nifty traded on a positive note, and we had a view that it should be a buy and dips market. Even those who are swing traders can buy Nifty for an upside target of maybe 1.5%. But if there is a correction also, that should be used as a buying opportunity. And Bank Nifty, we had a view that it is more sharper or more stronger than Nifty. So Nifty and Bank Nifty both perform on our expected line, but on Thursday and Friday at higher levels, as and when Nifty went into slightly over territory, we saw that due to the global weakness, there was selling pressure seen on Thursday and Friday, and the end of the week, Nifty ended. Indices, both the indices ended on a on a negative note. Now let us go to the daily charts of the Nifty and Bank Nifty, and we'll try to analyze what could be the further trend for the next week. Now let us go to the Nifty daily charts. This is the Nifty daily charts, and we have been discussing regarding the upward rising channel. So let me draw that particular upward rising channel so that we have a clear view. Now this was the channel which we have been discussing. You can see this was the support. Just look at the cursor. First support. This was the second support. This was the third support, and now Nifty ended on a negative note. It is just about the next support trend line. Now this is the Nifty daily charts. RSI, yes, it has given a negative crossover from the top. Now let me go to the weekly chart of the Nifty and we will have a clear view. Now you can see on Nifty weekly chart, the candlestick is weak. It is engulfing bearish candle. Some sort of weakness for the next week cannot be ruled out. So definitely the trend, the primary trend, you can see. Now let us go to the daily charts. This is the primary trend. So the primary trend remains to be intact, that is bullish, but maybe for next week or maybe for next couple of days, we might see Nifty trading with some weakness. And if Nifty manages to support or take a support around this blue trend line, or we might see Nifty penetrating below this support trend line, and again we are expecting that we might see buying coming in at the lower levels, and Nifty might come in this again in this rising channel. So this is the view which we are expecting, because the primary trend is still intact. Yes, because the weekly candle is slightly engulfing bearish, so further weakness cannot be ruled out, but we will see when we will analyze the option data where Nifty could take a support, and from there we might see a bounce back coming in the Nifty. So again, the view remains that the primary trend is intact, that is bullish, but for the week we might see some sort of further weakness, and we might see Nifty taking support at the lower levels. So now let us discuss the important supports and resistance level in the Nifty for the next week. So for the next week, the important support is placed at 17,401, which is the first support. Below that, the second support is near 17,222, and third support is near 17,156. Now these are the important supports. On the upside, the first resistance in the Nifty is placed near 17,691. Above that, the second resistance is near 17,861, and third resistance is near 18,008. 18,000 could act as a major resistance for the next week. So now friends, let us go to the Bank Nifty charts and we'll try to analyze what the charts are saying on the Bank Nifty. On the Bank Nifty daily charts, again, we have been discussing about the parallel rising channel, and still the view remains still intact. Bank Nifty has also managed to respect this particular rising channel. Let me draw this channel so we will have a clear view. Again, in Bank Nifty, it has been moving, making higher tops, higher bottoms in this rising channel. Currently, it is just near the midway of the channel. Yes, RSI has given a negative crossover from the above. So, looking at this pattern, we feel that weakness cannot be ruled out. But now let us go to the weekly charts and we will have a clear view. On the weekly charts, still uh, uh, Nifty has formed an inverted hammer, and this hammer could see or indicate some sort of further weakness from these levels. But as we can see, uh, last 10 to 12 weeks, Nifty has been moving in this channel, and the primary trend is still intact. So now let us go to the daily charts of the Bank Nifty, and we'll try to see what are the supports and resistance level in Bank Nifty for the next week. Again, looking at this pattern, we feel that the strategy should be buy on dips, but for a couple of days, a weakness cannot be ruled out from these levels. So now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 40,502. If it breaks, then second support is placed at 40,280, and third support is placed at 39,865. On the upside, the first resistance is placed at 41,162. Second resistance is placed at 41,626, and third resistance is placed at 41,840. So these are the important supports and resistance level in the Bank Nifty. So looking at the charts of Nifty and Bank Nifty, the view remains buy on dips. But yes, for the next week, at least for Monday and Tuesday, one should wait for some cool off, because the global markets are showing some sort of weakness. Yes, the global markets, I mean specifically the US markets, are into oversold territory. So a rebound cannot be ruled out, or a bounce back cannot be ruled out in the US markets. So maybe on Monday or Tuesday, we might see support coming in our markets also at the lower levels. So now let us come to the third segment of our show, which is option analysis. In option analysis, we'll try to figure out, or we'll try to analyze the data, the open interest, the implied volatility, the volumes, the strike prices, and we'll try to figure out where Nifty might take support at the lower levels and resistance at the higher levels, as vice versa, or similarly in the Bank Nifty also. So first of all, let us discuss what we have observed in Nifty calls. You will see on the screen, the action was seen in 17,600 calls, then 17,700 calls, 17,800 calls, and 17,900 calls, and up to certain levels 18,000 calls also. Here you can see there has been a rise in the open interest, there has been a rise in the implied volatility, but there has been a significant drop in the option premium. Now looking at to the last 2 days of the Nifty fall, or the fall in the market, the smart money might have started writing the out of the money Nifty calls. They might be thinking that maybe next week Nifty might remain under pressure, because you can see the implied volatility is also between 18.15 and 18.36. It is not in the danger zone, but yes, if there is a further fall from these levels, then it might come in the danger zone, and then from those levels we might see either short covering in the Nifty from the lower levels. And we have discussed the important supports from where we can see bounce back coming in at the lower levels. But as of now, on the upside, we feel that 17,800 to 17,900 could act as a major resistance, at least for the next week. So now let us discuss what we have observed in Nifty puts. You will see on the screen, in Nifty puts, the action was seen in 17,500 puts, then 17,400 puts, 17,300 puts, 17,200 puts, and up to certain levels again in 17,100 put also. Now here you can see there has been rise in the option premiums, which indicates that the smart money might have started buying Nifty puts, thinking that the markets might remain under pressure at least for next couple of days. Here you can see the implied volatility is shooting up. It is between 19.1 and 19.70. So maybe a further fall from these levels might bring implied volatility in the danger zone. Now here you can see the volumes are rising. Again, the open interest is also rising. But again, the option premium is also rising, which clearly indicates that at least for the next 2 days, or Monday or Tuesday, weakness cannot be ruled out. So weakness could be there, but as I said, on the downside, we feel that most probably 17,300 could act as a strong support, or 17,200 could act as a strong support in Nifty for the next week. So most probably, as I said, the option data is also indicating that maybe further weakness cannot be ruled out at least for next 2 days, Monday or Tuesday in the next week. Now let us see what we have observed in Bank Nifty calls. You will see on the screen, in Bank Nifty calls, the action was seen in 41,000 calls, 41,500 calls, and 42,000 calls. Now again, you can see here there has been a significant drop in option premium. There has been a rise in the open interest. There has been a rise in the volumes. The implied volatility is shooting up. It has entered into a danger zone. It is between 21.02 to 21.86. And this means that smart money might have done strong option writing, call option writing, out of the money option writing in Bank Nifty. So they feel that on the upside, maybe 41,500 could act as a strong resistance, and Bank Nifty does not cross at 41,500 in the next week. So further sell off or further cool off or further weakness could be seen in Bank Nifty looking at this data. Now let us see what we have observed in Bank Nifty puts. In Bank Nifty puts, the action was seen in 40,500 puts, then 40,200 puts, 39,500 puts. Here you can see there has been rise in the open interest, rise in the volumes, rise in the option premiums. Implied volatility is already into a danger zone. It is between 23.67 and 25.25. So looking at this data, we feel that on the downside, 39,500 could act as a strong support. We don't feel that Bank Nifty might go below those levels. So maybe in the next week, a further cool off could be seen. But again, at the lower levels, maybe between 39,700 and 39,500, we might see support coming in the Bank Nifty also. So looking at the charts and charts of Nifty and Bank Nifty and derivative data, we feel that for the next week, markets might see some sort of weakness, but maybe in the second part of the week, maybe from Wednesday, we might see support coming into the markets from the lower levels. And as I said, the US markets are also into oversold territory. A sharp pullback cannot be ruled out. So yes, for Monday and Tuesday, we might see selling pressure in the markets, in our Indian markets, and maybe at the lower levels, we might see buying coming in the oversold territory. So friends, now let us come to the third segment of our show, which is positional call. I have identified one stock from paint industry. The name of the stock is Indigo Paints. The stock has formed an inverse head and shoulder pattern, multiple shoulders ahead and multiple right shoulder on the right hand side. Let me put the RSI so we will have a clear view what the indicators are also indicating. RSI is also with positive bias. You can see when prices were making low tops or prices were stagnant, RSI was making higher tops, which is clearly indicating that uh, we might see a trend reversal from these levels. Now let me put a horizontal line so we will have a clear view about the inverse head and shoulder. This is a newly listed stock. The stock has sharply corrected after its listing. The stock has made a high of 3329, so almost 3330. It has corrected till the levels of 1300, 1370 mark. So almost we can consider it that the stock has corrected more than 50% in the last maybe 9 to 10 months. Now looking at this pattern, we feel this is the left shoulder, this is the head, and this is the right shoulder. The most important thing is the volumes are rising on the right shoulder part. Still it is in the process. Indigo Paints, this is the newly listed company. Festive season have already started, and festive season is going to remain till December. Diwali is coming, Navratri is coming, so we might see demand for the paints again. The support is the crude is falling down. Crude is correcting significantly. Crude is the derivative data or derivative raw material for paint industry. Falling crude is a very positive indication for the paint industry. So we feel at this level, the price, volumes, the indicators, the fundamental factors, the festive season, we feel the stock is poised for an upside rally for the long term. Now it is into a mid cap segment. Long term investors can accumulate the stock in the range of 1601 and on corrections to 1540 for an upside target of almost 1900. 1900 we have given a conservative target for long term, but looking at this pattern, the stock has potential to test the levels of 2240 or 2250 in next 12 to 18 months. So definitely long-term investors can accumulate the stock in the range of 1600 and on corrections to 1540 for an upside target of 1900 in long term, and maybe next 12 to 18 months, more than 12 to 18 months, the stock has potential to test the levels of 2250. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Again, thank you very much for watching the show.